Today's Thursday, August the 8th, and from the open, we just kept moving higher. And we're going to see how the Dow is on Thursday versus that big drop on Monday in a second. But we had average volume or above average volume in all three markets. That's a healthy sign. And advancers led decliners by more than 3-1. There wasn't a lot of red anywhere to be seen. Our stock breadth data, the McClellan oscillator, was on this dashed line here, this oversold line, and it's going to creep up a little bit higher towards the median line. And you'd have to say that the market is no longer concerned with what they were concerned with on Monday, which is the Chinese currency. And they've come to accept the fact that the tariffs are going to be here for the rest of the year and probably until the next election in November. And they'll only get worse. But it seems like a situation that we can live with because the consumer is still upbeat, believe it or not. So what does that mean now? The S&P is up 371. This was Monday's open and Monday's close. So we've recovered right back to almost back to August the 2nd, which was Friday, but we stopped at the 8-day moving average. And the S&P 500, which I prefer over the Dow 30, has stopped over the 8 EMA and now is just about where it opened on Friday, but it's above where it closed on Friday. So all of that loss, all of this gap here has been recovered in the last 3 days. It's like as if Monday never happened and is just a bad memory. Well, the bad memory caught some people off guard. Now I have to say that I'm hearing that Warren Buffett isn't buying anything, and he only buys when there's blood in the streets. He says that the best time to buy is when everyone else is selling. Let's look at the fear index. Ever since Monday, the fear index is falling, and it's falling down to where we could comfortably say, let's just take, let's look at a trend here, not a trend, but let's look at a channel. And let's try to find where the volatility index channels in good times. Could be here. This would appear to be where the volatility index this year, 2019, has felt comfortable in staying within. I'm a little bit trying to make this perfect, but I don't know why. And we're back now into this comfort zone, which means that the market could be in for more upside tomorrow, barring any tweets. Apple, did it close the gap here? Let's take a look. As we go. So they did not close the gap today, and the gap would have been a retrace up to 68.1 of our recent high, and we've got a little bit of a way to go. I don't even see a wick to this candle, meaning that Apple finished at its high of the day. That's certainly bullish after a confirming double bounce off of the cloud. So Apple is still moving upwards. We can expect resistance at the top of the gap, and we should put an alert for 61.8 and the top of the gap when we get to that point. So that would be right here, 204.17. Caterpillar, a few signs of life, still below that trend line that we set with its originating point back in November of 2018. hit it again in May and confirmed it as a trend line in early August. And now it's just below that trend line. So we did get an alert. So let's just put an alert. Let's just forget that alert. We're looking for a movement above the trend line now. Gold the miners are strong. So we had this pop yesterday and then a pullback, and then we recovered today. So don't know what to think about gold. It's probably not a bad thing to have, and I think tomorrow I should start investing in some GDX. It will pick up slack if the market does any pullbacks. WDC, big jump. And is there anything we can say about it here? Ichimoku wise, not really, but on the weekly, we're in the cloud. Remember, let's go back to the S&P, and let's look at the S&P 1 day. And we've popped out of the cloud. We said yesterday and the day before that we expected to channel in the cloud. Well, we're out of the cloud, and the Chiku span stopped on the 8 EMA. That's not a very big resistance factor, I wouldn't think. I would think that the candles up above are more of a resistance factor than the 8 EMA. I think it's safe to get back in the water here for the long term for the S&P 500, but it is still August, and strange things can happen in August. Whirlpool is coming back nicely. It's broken the bottom trend line. It started the day off jumping up over the trend line, getting support there and moving upwards. So unfortunately, what I did with Whirlpool was try to protect against losses, and I sold some calls, and they are going to take my stock tomorrow, and I will have given up a fair bit of gain, these 3 days worth of gain. But if we're up again tomorrow, I'm going to lose my stock, and I'm just going to go back again, and I'm going to buy the stock with the 145 calls, because I believe the next resistance point is going to be 146.01. We've had low volume in Whirlpool, so no commitment from institutions and the big buyers or the big sellers. So that's something to keep an eye on. The 8 EMA was resistance, but again, I don't think that that's going to hold for very long. So tomorrow let's look at Whirlpool, and let's look at GDX, and let's look for Apple to pull back from the top of the gap, maybe come back to the 50-day EMA, which is where we started the day. Wouldn't that be great? Halfway in the gap, that would be a sign to add a few more 100 shares of Apple.